Okay. Bismillahirrahmanirrahim. Let's start with the today's session. And today, what we are going to start that is the standard IAS 16. And let's have basics of that IAS 16. Although this is standard is such that you have already studied in your past or the previous exams, like every financial accounting paper. But since I will have an assumption that you don't remember these concepts that you have already studied in F7 or F3 financial accounting paper, so we'll just have a recap of this one, that whatever you have done since in the past in your previous exams, and then we'll move on towards the extraordinary or the most important areas. Okay. Now let's start with the today's session. First of all, as usual, at the start of every standard, what we will be doing, we'll be discussing the importance, the exam weightage, and importance of that particular standard. That how important that particular standard is with respect to the examination point of view. Now let's start with the IAS 16 property plan and equipment. It's one of the most important standard. And if I would just talk about the exam weightage, that at how many questions or how many MCQs can examiner ask regarding this particular standard, so I would say that examiner might ask you and might test you regarding 4 to 6 marks of paper. This means that around 4 to 6% of the paper. The weightage of this standard is around 4 to 6% of the paper, and you should not consider it as a lower percentage. It's quite huge percentage because 6% of the paper is considered the most important area. So this standard is very important because of two reasons. Number one, because the exam weightage is quite more than compared to the other standards, and the second thing is that particular standard is linked or connected. That particular standard is linked or connected with other accounting standards. With other accounting standards means other chapters, other topics. This standard is connected or linked with the other accounting standards. So because of this one, this standard is very important. And today in this session, I'm going to give you some highlights that how this standard is linked with other accounting standard. We will have some introduction that how this particular accounting standard is connected, is integrated, connected. The rules that we'll be studying in IAS 16, property, plant and equipment, same rules or these familiar rules will be applicable or implemented in other accounting standards. So if you have a very good grip in that particular accounting standard, this will help you out in other standards as well. Are you guys clear on this one?
Yeah.
Hello? Are you guys clear with this one? Andrew?
Hello, sir. I'm
Yes.
getting you, sir.
Okay, nice. So the exam weightage and importance is around 4 to 6%, and plus the most important advantage of studying this standard that it is connected with other accounting standards as well. Now, let's move on. First of all, let's discuss that what is IS 16 or the property, plant and equipment. What is a property, plant and equipment? Let's read out or let's have a review of the definition that is given by the IAS 16. IAS 16 states that the property, plant, and equipment is an asset. The first thing is that is it's an asset. And we all know that what are assets? Assets are the resources controlled by the entity as a result of past event, and there will be a future benefit. We all know that. What are assets? Now, property, plant, and equipments are the assets. Property, plant, and equipment are assets, but that has two important feature. That has two important feature. Number one, the important feature is that the benefit will flow to the entity. The benefit will flow to the entity for more than 12 months. For more than 12 months. Benefit will flow to the entity for more than 12 months, which means that you will get the benefit of that particular asset, but that is for the period of more than 12 months, which means now the property, plant, and equipment is an asset, and it is that particular asset which will provide you or give you the benefit for more than 12 months. Second, The most important another feature of that property, plant and equipment is that property, plant and equipment is an asset. This will give you a benefit for more than 12 months and it is held for use. It is held for use. Remember, it's not for the purpose of resale, because if you have any asset which is for the purpose of resale, any asset that you have bought for the purpose of resale will be classified as an inventory and this will fall under the head of inventory. Are you guys getting a point?
Once more, repeat the second stage once more, please.
I said that you have an asset, and if that asset is for the purpose of resale, if that asset is for the purpose of resale, so which means that asset is for the purpose of resale, this would be classified as an inventory. This would be classified as an inventory. And inventory is a current asset. Merchandise is a current asset. Inventory or merchandise is a current asset. Here, the property, plant, and equipment is an asset which will give you a benefit for more than 12 months. Plus, in addition, it is held for the purpose of use. That you will not be selling that asset, although you will be using that asset. Are you guys getting this one?
Yes, sir. Yes, sir.
Mamaduba?
Yes, clear.
Okay. Which means that if you have an asset and it will give you a benefit for more than 12 months, and if you will be using that asset, this will be classified as a property, plant and equipment. Now, IAS 16 states that if you are having an asset and this will give you a benefit for more than 12 months and it is held for the purpose of use. Now there are four ways through which an asset can be used. There are four ways through which an asset can be used. Number one, the first way that you can use an asset in the production, in the production of goods. Let's take an example for this one. In the production of goods, let's take an example for this one. Let's take an example for this one. That if you are having an asset, and for example, the asset is machine. The asset is machine. What you are doing, that you are using that machine for production. For example, what I'm doing, that I bought a machine and this will give me a benefit of 12 months or more than 12 months, and I'm manufacturing that pen. I'm manufacturing that marker. It means that machine is being used for the production of goods. The other way to use that asset, the other way to use that asset is the other way to use an asset is the supply of goods or services. Supply of goods or services. Now, what could be a best example for this one? What could be a best example for this one? That you bought an asset for the supply of goods or services. The example is the motor vehicle. The best example is the motor vehicle. For example, you have truck, you have crawlers, you have car, and what are you doing? That you bought that motor vehicle for the delivery of goods or services from one place to another. I have some motor vehicles. I have some, for example, motor vehicles, trucks and crawlers, and that trucks and crawlers are being used for the delivery of goods from one place to another. Which means, again, what I'm doing, that I'm using that asset. I'm using that motor vehicle for the supply of goods and services. The other way to use the asset is for admin purposes. For admin purposes. Now, what does it means? That you bought an asset, and what you're doing, that you're not making a production. You're not using that asset for delivery of goods, but what you're doing, that you have bought that asset for administrative purposes. Like you have seen in the offices, if you're working somewhere, you've seen there are furnitures, there are equipments, there are laptops, there are computer systems, there are so many non-current assets, and these non-current assets are not for the production purposes, not for the supply of goods and services, but these assets are being held for administrative purposes. So these are known as for admin purposes. The example, the best example could be the furniture. The furniture held by the officers for the use, that is for admin purposes, the furnitures and computers like equipments are the best example for this one. And the last way to use the asset, that the last way to use the asset is rental to others. IAS 16 states that if you have an asset, if you have an asset and you will see that if that asset will give you a benefit for more than 12 months, this will give you a benefit of more than 12 months, and you're using that asset. Now the question arises, how we can use that asset? So in order to use that asset, we have four different options. Number one, we can use that asset by producing the goods. We can use that asset by the supply of goods and services. We can use that asset by for administrative purposes, and we can also use that asset for rental to others. Let me give an example for this one, how we can rental to others. For example, I do have a machine or a motor vehicle. I don't know whether in your country it usually happens or not. In Pakistan, we if I have a car, I can rent it out to other one, that I rent it out for 2 days or 3 days or 4 days, that you use that car and you just pay a money for this month. So it means what I'm doing, that I am giving that car for rental purposes. So if, for example, a motor vehicle or a car or a machine or an equipment is given on a rental basis, a car, machine or equipment is given on a rental basis, this will also be considered as you are using that asset, although you have given that asset to someone else, although someone else is using that asset. But IS 16 states that since you had that asset and you gave this asset on a rental purposes, now we will consider that it is your asset. It will be classified as a property, plant, and equipment. And to make it very simple, we can say that the property, plant, and equipment is basically a non current asset, or we can say that it is basically a fixed asset, because we all know that an asset which has a life of more than 12 months is considered as a fixed asset. Do you guys understand the definition of a property, plant, and equipment? Yes, please. Do confirm me first. Do you guys understand the definition of a property, plant, and equipment? What is property, plant, and equipment? It is basically a non-current asset, which means that an asset which has a life of more than 12 months and that is held for the purpose of use. If you are using that asset either for the production of goods or for the supply of goods and services or for the administrative purposes, or even you have rented out that asset, that will be considered that you are using that asset. And once you're using that asset, which means this will be classified as a property, plant, and equipment. Are we guys clear on this one? Please let me know.
Yes, sir. Yes, sir.
Yes, we are clear.
Yes, well,
Okay.
it's good.
Fatuma, are you clear this one? I guess you have some connectivity issues.
Yeah, I am clear. The internet problem in our country is a really problem. I've been trying to connect for the past 10 minutes. I'm unable, but thank God
Okay,
now.
no problem.
I've been able to use my phone. Still trying to
Okay,
connect to the laptop.
no problem. Okay. Now let's move on. Now I'm going for the exception. Please listen to me very carefully. IS 16 states that if you have an asset that is for rental to others, there is an exception in this one. For example, if you have a property, and what do we mean by property? Property means a land and building. Property means a land and building. If you have a property like land or building, there is nothing else in this property. If you have a property and since you are renting out that property, you have rented out that property, or you hold that property for capital appreciation. For capital appreciation, I repeat my words. IS 16 states that if you are having a property and that property is held for rental to others. For example, you have a building, you have a flat, you have an apartment, and what you have done that you have rented out that property, you have rented out that flat, or you have that property or land for capital appreciation. Now, what is capital appreciation? That you have kept a property that the value of that property will increase in future. Sometimes it happens with you guys that you have extra money. What you are doing that you want to make an investment. So what do? You usually buy a property. You usually buy a piece of land so that you just keep it. You just hold it. Why? So that in future your future will be secure and the value of that land will increase. Am I right? This happens in your practical life that you have a property. At times you rent out that property, at times you also keep that property for future capital appreciation. I can also say this one for long term capital appreciation for like 5 years, 10 years, 13 years, 50 years, that you just bought that property and you said that let's keep that land for future long term capital appreciation. Then IAS 16 states that if you have any property which is being rented out, I am not talking about the machine, motor vehicle, equipment. I'm talking about the property. If you have any property and you have rented out that property, or if you have hold that property for capital appreciation, then such property should not be included under the head of IAS 16. Instead, instead, such property should be classified as under the another standard, and the name of that standard is IAS 40. The name of that standard is investment property. The name of that standard is investment property. I repeat my words that, for example, I do have a land or building, and you can ask a question. So, what are you doing with that land or building? So, I'm using that building for production. I'm using that from building for production. Now, which standard will be applicable? IAS 16. You may ask a question. This is what do you have? I do have a building. Why? What are you doing with that building? I'm using that building for the delivery of goods. For example, that building is like a warehouse for me. And what I'm doing that I'm using that building for production for the delivery of goods. There the goods are stored and then goods are delivered from that place. It means again what I'm doing, I'm using that property as a supplier of goods or services. I do have a building. So what are you doing with that building? So this is considered to be the head office for me. Here the people are working and we have a head office. So it means that building is being used for admin purposes. This will be classified under the head of IAS 16. It's a property, plant, and equipment for the company. But now listen to me very carefully. I do have a building, but this time building I do have, I will be renting out. I have rented out that building to someone else, to some tenant. I have rented out that building. Now IS 16 states that we apologize for this one, but now this building will not be classified as a property, plant, and equipment. And the rules that are given in the IS 16. Now you just see these are the rules for the IS 16. These are the rules for the IS 16. You just see the screen. These are the rules for the IS 16. These rules will not be applied on that property. For this kind of property, we have made a separate accounting standard. For this kind of property, we have made separate rules and regulations, and these separate rules and regulations will be given in IAS 40, and this property will be known as what? Investment property. Are you guys getting this point? Please do let me know.
Yes, sir. If I may ask a question, just a question.
Yeah, sure.
So, in a case now, you have a land, or let's say he has a building, then you lease it out. Do you account it under IAS 16? Let's say you lease it out for let's say for 6 months or 1 year or more than a year.
Yes, this will be classified as an investment property if the lease or the rental period is for the less than 12 months. One more thing, Andrew, there is a separate standard for the leasing.
Yes,
With
I know.
respect to the leasing, we have a very detailed discussion in future for which we will see that how the lease accounting treatment is being recorded. But so far, what I'm talking, that if you have rented out a property, if you're renting out a property, and lease is something very different. It is basically a kind of a sale on installment basis. Are you getting a point? It's not a rental. Basically, whenever you lease an asset, it means that you bought an asset on installment basis. The substance is basically that you are purchasing that asset on a installment basis, that you will pay the price of that property, but on an installment basis, on different installment basis. Are you getting it, Andrew?
Sir, yes, sir. I get it.
Good. Fatuma, are you asking something?
Yeah, I want to ask something.
Yes, sure.
With regards, yeah, with also regards to IAS 16 and that of IAS 40, I want to know if I have a building, which that building I am using part of it for my own business purpose, and I
Very good. A very
rented
good question.
out.
I got it. I got your question, Fatuma. You are saying that you bought a building, part of the building is used for your personal or for your office use for admin purposes, and half of the building is being rented out. What will be the accounting treatment? We will ask that accounting treatment from IS 40. So far, my concentration in this topic is not for IS 40. What I'm doing, that I'm trying to link, I'm trying to create a link that yes, if there's a property that is held for the rental purposes, now on that property we're not going to apply the IS 16 exclusively. Here the another accounting standard that is applicable, which is known as what? Investment property, IAS 40. Yes, there are different ifs and buts. For example, if the some part is used for the business, some part is rented out, so there could be a different accounting treatment. This will be dealt under IAS 40. Fatuma, are you clear with this one?
Yes, sir.
Great. Okay, now, so it means I told you at the start that is the standard is very important. Why? Because this standard is linked or connected with the different standards. Here I got the link, the first link with the IAS 40. That if the property is for the rental purposes or for capital appreciation, this would be classified as an IS 40. And once we will move on towards the IS 40, you will see that there will be multiple rules and regulations that will be adopted from the IS 16. There will be multiple rules and regulations that will be adopted from the IS 16. So if you have a good script on that particular IS 16, so definitely you will ace and you will have a very good grip on IAS 40 as well. Okay, now let's continue. So we got the point that if you have a rented property and you are going to rent it out, let's keep that property for investment property, and this will be classified as IAS 40. Now, once we have recognized the property, plant, and equipment, for example, we said that yes, we got a furniture, we bought a furniture, and this furniture we have bought for the purpose of use. We'll be using that asset, and we will be using that asset for more than 12 months. For more than 12 months, we'll be using that asset for more than 12 months. Now, what we have to do, you need to recognize that furniture as a property, plant, and equipment. And once we are going to recognize it, this is known as what? Initial recognition. This is known as what? Initial recognition. Or at times, it is also known as what? Initial measurement. I repeat, once the item of property, plant, and equipment is being recognized, what we have to do, we need to recognize that initial recognition or initial measurement. We are going to recognize that property, that is known as what? Initial means that is the first recognition. First time we are going to recognize that furniture as a property, plant, and equipment. And in order to recognize, definitely we will pass an accounting entry. And if we bought an asset, the accounting entry should have been that is property, plant, and equipment will be debited and bank account will be credited. Are we clear on this one? That since we have recognized, since all the criterias are met, that it is for the purpose of use, number one, and it will give you a benefit for more than 12 months. Congratulations, this furniture will be classified as a property, plant, and equipment, and the other name of property, plant, and equipment could be a non-current asset. So we'll recognize that furniture as a non-current asset or the property, plant, and equipment, and we are going to recognize with the initial recognition or the initial measurement. And since we are initially recognizing it, so the accounting entry should have been made property, plant, and equipment, and bank will be credited. Are we clear on this one? Yes, Sophie, please participate. Mohammedoba, Andrew, and Fatuma.
Yes, clear.
Clear, sir, clear.
Sophie,
Yes, yes, it's clear.
okay, great. Now, the question arises, at what value this property, plant, and equipment should be recognized? At what value that property, plant, and equipment should be recognized? So answer of this question is that the property, plant, and equipment should be recognized at its cost. Such property, plant, and equipment should be recognized at its cost, and this cost is known as what? Historical cost. This cost is known as what? The historical cost. And now what is historical cost? What is historical cost? It is the cost at which asset was purchased. Let me give you an example for this one. I bought a furniture and I bought it for example, the purchase price of that asset, the purchase price that I paid to the supplier, purchase price that I paid to the supplier was, let's say, $2,000. I bought a furniture, the purchase price was $2,000, and I paid a transportation cost. I paid a transportation cost for $1,000, and I also paid an installation cost. I also paid an installation cost to install that furniture, that is to load that furniture, for let's say $500. I also had some insurance to purchase that asset so that I could avoid the risk. This is known as what? Insurance in transit. And this was for $500. I paid to my labor, to the staff wages, that is around $1,000. Now, if somebody asks me that you bought an asset, you bought a furniture or an equipment or a machine or anything else, you just let me know that what is the cost of that asset. What you will say that whether the cost of an asset is $2,000. You guys please participate in this one. Whether the cost of that asset is $2,000.
Um, if I
What
may
is
come in, we can say the cost of the asset is $2,000 because according to you trying to calculate the cost of the assets, whatever cost that you spend in bringing the assets to where you
Yes.
want it
So
might
what
be
should be, yes.
capitalized in
So
the cost of the asset.
what should be the cost of that asset? Whether it should be $2,000.
No, no, no.
no, it
It
should not
should
be
be
the
inclusive of the cost of the assets, transportation, installation cost, and insurance being paid for all those assets, and also labor. That's
Yes,
you
it
are going to
means
add it.
yes, which means if somebody asks you that for what amount you have bought that asset, you won't say that it's for $2,000. You have paid that asset for the purchase. You have paid all of these costs for the purchase of that asset. What you will say that the cost of that asset is 2,000 plus 1,000 plus 500 plus 500, that is 4,000, and then 1,000, that is 5,000. So it means you will say that the cost of that asset for me is $5,000. Cost of an asset for me is $5,000. Am I right? Yes, Sophia, Andrew, do you agree with this one?
Yes, sir, yes,
Yes,
sir.
I agree.
Great. Which means the cost of an asset is $5,000. Now, listen to me very carefully. Once I bought that furniture or an equipment for $5,000, that is from my one of my relative. and he gave me a very good discount, and then I got that asset on for the $5,000. And if I just tell you that market value, don't say to anyone, don't let anyone know that the market value of that asset was $3,000. If I would have purchased it from the market, or let's say the market value of an asset is, let's say, $8,000. The market value of an asset was $8,000. If I would have purchased that asset, so it means the total amount that I would have to pay to the market is $8,000, since I bought that asset from my nearest relation, from one of my very good supplier, from one of the supplier that have good very terms and conditions with me. So he just gave me that asset with all those costs for $5,000. If I would have purchased that asset from the market, so I would have paid $8,000. Now there is a contradiction. Now there's a problem. I'm tested that whether I should record the entry with the $1,000, sorry, with the $5,000 or with the $8,000. Now I should record the entry. I should record the entry with whether the $5,000 or with the $8,000. So there is a solution that is given by the IAS 16. IAS 16 states that you will record that asset at its cost, and cost means the historical cost. And what is historical cost? The cost at which the asset was purchased. Forget about the market value. We are not going to consider about the market value. You just tell me that you bought that asset at what cost. So you bought an asset for the cost of $5,000. So what you have to do, you need to recognize that asset at its cost. You are going to recognize that asset at its cost, which means the $5,000. Are you guys clear with this one? Please do let me know.
Yeah, it's
Yes, sir,
fine.
we are clear.
Clear, clear.
Nice.
Yes, it's clear.
Great. Okay. Let's move on again. Now, since we are calculating the cost of an asset, we just saw that these are the costs which will be included. And it was rightly said by one of the participants that since these costs are incurred for the acquisition of non-current asset, and it's not we talking about the standard, it's natural. For example, you bought a cell phone, or you whenever you bought an equipment or machine or any equipment or any gadget, what you do that, for example, if you have paid, for example, let's take a very simple example for this one. You bought the lecture, you paid the fee, and definitely you paid some transaction cost for this one. So, for example, if you paid me, let's say $100, so what you will say that $100 plus $2 the transaction fee that you have paid. So what you will see and what you will learn that I have paid $102. So this is something normal. There's nothing to do with the accounting standard. But accounting standards gives explanation for this one that once you have paid any amount for the purchase, any amount for any cost you have incurred, any cost for the purchase of non-current asset, this will be this will be included in the cost of an asset. This will be included in the cost of an asset. Now, let's move on towards the more conceptual side. Listen to me very carefully, okay? Listen to me very carefully. What you have seen that in order to calculate the cost, we include different costs like transportation, labor charges. If I just make a rough example for this one, so we have purchase price, and then we have included what the transportation cost. We have included what the installation cost. We have included what the wages or the labor charges, wages cost. So since we have included all of these costs, okay. Now, while including all of these costs, there are two other costs that will also be included. Number one is the borrowing cost. Now, first understand what is borrowing cost. Borrowing, the word borrowing means that you have taken a loan. For example, if I would say that I borrow 500,000. What does it mean? That I have taken a loan. Borrowing means a loan. And now let's complete the phrase. It's a borrowing cost, which means it's a cost of a loan. It's a cost of a loan. Always remember, every benefit will cost you. Every benefit will cost you. If you're taking a benefit from the employees, the salaries will be the cost for this one. You have taken a benefit for the property, rent will be the cost. You have taken the benefit of the electricity, utility bills will be the cost. And you have taken the benefit of the loan, so there will be a cost, and this cost will be known as what? Can you guys participate in this one? If you have taken a loan, so obviously there will be a cost, and the cost will be known as what? And the cost will be known as what?
Interest.
Borrowing
Interest.
cost.
Nice. Yes. So it means the other name of the borrowing cost is known as what? The interest. Other name of the borrowing cost is basically the interest. So now, very important concept is that whether are we going to capitalize? Yes, one other thing, one other very important terminology that I used it, that what we are doing, we are capitalizing. What we are doing, we are capitalizing. We are capitalizing. Whenever I use the word capitalize, which means that I'm making the part of an asset. I'm making that part, I'm making that cost as a part of an asset. If I would say that I have capitalized the transaction cost, transportation cost, I have capitalized the installation cost, I have capital. What does it mean? Capitalization or the capitalize means that is to make the part of asset. Capitalize means to make part of asset. Make a part of asset. Capitalize means to make a part of asset, which means the borrowing cost means the cost that you have incurred or the cost you will be incurring, the cost you will be incurring, the cost you will be incurring on the loan amount, which means the interest. In the simple way, in the simple sentence, in the simple language, we can say that it's an interest. So now the question is whether we are going to capitalize, and what I said, whenever I will use the word capitalize, which means we will make the part of asset. So are we going to capitalize or are we going to make that interest a part of non-current asset? Answer is yes. We are going to capitalize the borrowing cost. We are going to capitalize the interest. We are going to add that interest in the value of non-current asset. Let me repeat my sentence. We are going to add the amount of interest in the value of non-current asset. Let me repeat my words again. Please open your mind. We are going to add interest in the value of non-current asset. So how, why, when? Answer of these questions will be considered or will be taken in standard, and that standard is known as what? IAS 23. I repeat, yes, we are going to add interest in the value of non-current asset. So how, when, who, how it could be possible, how we will do this one? For this, for all of all those answers, for all those questions, we will study IAS 23. The title of IAS 23 is borrowing cost. The title of IAS 23 is borrowing cost. It's a borrowing cost. That IAS 23 will guide us. That IAS 23 will give you the details that when and how the interest should be capitalized, and when and how the interest should not be capitalized, when and how the interest should be capitalized, when and how the interest should not be capitalized. Are we getting this point? Ladies and gentlemen, please let me know.
Yes, sir. Yes, sir.
So yeah.
Yes, we are getting.
Mamaduba, please confirm me whether you are with us or not. Are you getting this point? Have you
Yes.
got this concept?
Yeah.
Today I'm
Yeah.
going
Yeah.
up. Today I'm going a bit slower. I just want you all to get uh, I just want you all to understand. It's not that we rush off and we just complete the area without you are having any knowledge or you are not getting the point. It's not the use, it's not the purpose of this session.
You are right, sir.
Okay. Now, having said this, there is another cost that we are going to incur, that we are going to add, that we are going to capitalize, that we are going to capitalize, that we are going to capitalize. Please, please, please use this terminology. Now you are getting older, you are getting bigger, no? So you need to understand this one, that we are going to capitalize. Capitalize means that you are going to add up this cost, and the name of that cost is, it's a present value. PV stands for present value. PV stands for present value. Let me write it down completely. The complete terminology for this one. Present value, PV. Now later on, I'll be using the word PV. Present value of dismantling cost. Dismantling cost. Now there is no as such separate standard for this one. There is no as such a separate standard. Now dismantling cost is treated, always discussed in different accounting standards. So we are going to have a very good understanding for this one. So far, I'm not letting you know about the borrowing cost. What is borrowing cost, when to capitalize, when not to capitalize. This all will be discussed in IS 23. I'll be discussing in complete detail when and what to recognize. We'll discuss in IS 23. But yes, for dismantling cost, it's my responsibility to let you know that what is dismantling cost and how it should be recorded, at what amount should be recorded, and what should be the accounting treatment for this one. So I'll be discussing this one. So get ready for this one. Now, first of all, what is dismantling cost? What is dismantling cost? This is something which I guess you have not studied in your previous subject, that is financial accounting. So I'll be giving you a very good detail for this one. First of all, what is dismantling? I'm not discussing the dismantling cost. I am just discussing what is dismantling. Dismantling means that is removing the asset. Yes, dismantling means that is removing the asset. At times, dismantling is also known as decommissioning. Decommissioning. Dismantling is also known as what? Decommissioning. What is dismantling? That is removing the asset. Now, what do we mean by this one? See, whenever you install an heavy machineries, I don't know whether we have seen or not. Let me give you an example that is given by the accounting standard, and that is that I have already seen practically in my life. That since you are exploring oil, you are extracting oil. Once you are extracting oil, for example, you extract oil from the sea. This is sea. Okay. This blue one is the sea. Now, what I'm doing, I am installing a machine. This black pen or the black one is like a machine. I don't know whether you are thinking about the tree or what, but assume it that it is a machine. It is the machine that I am installing over here. I'm installing a machine, and why I am installing that machine? To extract or to explore oil from the sea. I have installed a machine. I have installed a machine today. I have installed a machine today. Why? Explore oil from the sea. Explore oil from the sea. Now, since I have installed it on 1st of January 2019, I installed that asset into the sea, and I'll be exploring the oil. Now, there will always be a time that the oil will be extracted. After a particular time period, there will be no oil, and you will not be able to extract more oil from that area because the oil or the resources will be finished from that particular area. Now, since you have installed that asset, now what you will be doing, that you will know that after a period of 5 years, let's say, after a period of 5 years, that is 2019, let's say it's 2019. So 2019, and after 2020, 2021, 2022, how many years? One, two, three, and then four, and 2023. You said that after a period of 5 years, there will be no oil. And if there will be no oil, definitely there is no purpose of the machine to be installed. So what we have to do, that after a period of 5 years, that in 2023, what we will be doing, that we will be dismantling the asset. We will be removing that asset. Why? Come on, yeah. We have bought that machine, and the life of that machine is around 20 years. We'll not be discarding that machine after the 5 years. If the oil is not yet being explored, or for example, if there is no oil in the sea for after the 5 years, so definitely we are not going to discard that machine. We will dismantle that asset, and we will use or install that asset at somewhere else, so that we can explore oil from that particular place or area. In 2023, what we are thinking, that we will remove that asset. We will remove that asset, and the technical term to remove that asset is known as what? Dismantle. I would recommend you guys, whenever anyone says that we are discarding that asset. For example, this happens with you in a personal life. You have a furniture in your home, at your home, and after a certain time period, what do you say? That come on here, let's sell it out. Let's remove that asset from what you said. Right? Let's remove that asset. Do not use the word remove that asset. Let's dismantle that asset. Are you guys getting my point? So far, are you guys with me?
Yes, sir. Yes, sir.
Yes.
Yes, Sophia, Fatima.
Yes.
Yeah, we are with you.
Great. Okay. So it means in the year 2023, you'll be dismantling that asset. You'll be removing that asset. You'll be removing that asset. But let me know, you will remove that asset when? After a period of 5 years. Now, come back to 2019. Today, we have installed that asset in 2019. Now, let's please do concentrate on this one. I bought that asset in 2019 on 1st of January. Now, what I said, that I bought that asset, and the purchase price of that asset that I paid to the supplier is $2,000, and let's say transportation and installation, there was a transportation cost, and there was an installation cost, and there was some import duties and the custom duties, and there were multiple charges that I paid to buy that asset. And all of these cost me around, let's say, $3,000, which means so far the cost of the asset is 2,000 plus 3,000. Is it? That is $5,000, is, by the way, the cost of asset. $5,000 is basically the cost of this asset right now. $5,000 is basically the cost of this asset. Now, one point that comes to my mind, that I have installed that machine today, but I know that I have to remove that asset after a period of 5 years, which means it's obligatory on me. Can I avoid this one? Can anyone tell me, please, can I avoid this event? Please let me know. Can I avoid this event? Anyhow, is it possible to avoid this event since I have installed the machine? Yes, please. Do let me know.
No, for
Yes,
me,
sir.
no.
Okay. Let me wait. Anu, are you
Yes,
done?
Father.
Because of the word obligation, it is obligated on you. So for me, no.
Yes. Yes, we can't avoid this one.
Yeah.
Yes,
In
Fatima, you're saying
addition to
something.
what, yeah, in addition to what Anu have said, it is obligational because you install the machine, and after the period of 5 years, you should dismantle it. So that cost you are
Hmm.
going to bear it. There's no way you are going to what forgone that cost.
Yes.
So it's
So it
obligation.
means, yes, it means I cannot avoid that one. I have to remove that asset. And what do you think, guys? Will I be removing that asset at free of cost? This is the huge machine that I've installed. It's not that I will say that go machine go, and machine will be removed. Is this the case? No, it's not the case. In order to remove, in order to dismantle that asset, I have to incur a huge cost. I have to incur a huge cost. It means in order to remove, in order to dismantle the asset, I have to incur a huge cost, and that is known as what? The dismantling cost. This is known as what? The dismantling cost. This is known as what? The dismantling cost. What is dismantling cost? Dismantling cost means it's a cost, it's an expense, it's a cost, it's an expenditure incurred incurred for removing for removing the asset. It's an expenditure incurred for removing the asset. It's a cost incurred for removing the asset. Are you guys getting this point?
Yes, sir. Yes, sir.
Yes, Fatima.
Yeah. I want to ask a question.
Yes.
In an event wherein you've purchased a machine and there is a company that is responsible for the installation and the dismantling. And of course, at the end of the day, the company says that if this machine is going to be used on the site for 5 years, you have to pay for both the installation and the dismantling. So at the period of 5 years, they'll come again and dismantle the assets. So how are we to treat both the installation cost and that of the dismantling cost?
Fatima, if that asset will be used in that particular place or it will be used at some other place,
Oh,
the
the
asset,
asset is being used in a particular place that was installed
they
for you.
there will there will be a certain time period when the asset will be dismantled. If you say that after 5 years you'll be using that asset and that particular place for some other purposes, fine, I agree with this one. But since there will be some time period, it could either be 10 years, 15 years, 20 years, 25 years, 30 years, man. A time will come, you have to dismantle. You cannot leave that asset at that place. Since you have installed it, this kind of huge machineries. No, please listen to me. I'm not talking about equipment. For example, computer. If you want to remove that computer, oh come on, just pick it up and throw it out. So there's no cost for this one. Sometimes to dismantle an asset, there is no cost incurred. At times it happens. For example, you have furniture and you have a very small furniture. So you thought that just to dismantle, okay, if you call a person, you call an employee, he just put it off and he just come on, throw it out. So it means there is no cost for this one. At times it happens. If you have a very small asset, there is no dismantling cost. But at times I'm talking about the huge equipments, man. I'm talking about the huge machineries and the equipments which are installed in the ground in the sea level. So these assets will be removed or dismantled not after the 5 years. Okay, agree with this one. Not after the 10 years. Agree this one. After 15 years, 20 years, 25, 30, 35, 40, a time will come you have to remove that asset from that particular place. Are you getting it now?
Yes, sir.
Okay.
Yes, sir. If I may ask a question,
Yes,
what is the
please.
W entry? What is
I'm
the
coming
W
up.
entry for this
I'm coming for this
dismantling?
one. I'm coming for this one. I'm coming for this one. The first agenda for this discussion was to give you an understanding that what is dismantling cost. If you're clear with this one, I'm coming back towards the entry side, double entry side. Now, since this cost will be incurred after a period of 5 years, but today what we are doing, we are recording that equipment or the machine, you have installed that machine today here at at 1st of January 2019. Now, you know that there is a cost that will be incurred after a period of 5 years. So, do you have any idea that what cost will be incurred? Yes, I can make an estimate for this one. For example, the estimate is it will incur around let's say $2,500. That since after the 5 years, once I will dismantle, so there will be an estimated. I cannot have an actual value because this is the future value. That is the future cost that I will be incurring. So I cannot have some actual values, but yes, I can have a very good estimate. I can take an estimate from a company. That company says that around $2,500 will be incurred in a 5 years time. Once you will remove that asset in 2023, you will have to incur a cost of $2,500. Now that is an estimate. Now, this is something, or this is the amount that you will be paying after 5 years. Please listen to me very carefully. This is the amount which you have already paid. This is the amount which you have already paid. This is the amount which you have already paid. This is the amount which you have already paid. But since there is an amount of $2,500 which you have not yet paid, and this will be paid after a period of 5 years, any amount that will be paid at some future date, any amount this will be paid at some future date, what do we call that amount? What do we call that value? Any amount that will be paid in future. For example, I will have to pay that amount. I'll be paying that amount. I will pay in future. I have an obligation to pay that amount in future. So what do we say that amount in accounting? What do we say that value or amount in an accounting terminology?
It's a
Can we say
liability.
accrual? Accruals.
Yes, it's an accrual, or we can say that it's a liability. It's an accrual or it's a liability. Mamaduba and Sophie, are you getting the points?
Yeah.
It means that $2,500 is basically a liability. It's a liability on the organization that after a period of 5 years, we have to pay $2,500. But now listen to me very carefully. Any amount that will be paid in future, any amount that will be paid in future, any amount that will be paid in future, and if it is recorded in present, let me complete my sentence again. Any amount that will be paid in future, any amount that will be paid in future, any amount that will be paid in future, that will be paid in future, any amount that will be paid in future, but we have to record, we have to record it today, we have to record it today. Any amount that will be paid in future, but we have to record it today. Any amount that we have to paid in future, but we have to record it today. What we are going to do, it's a basic concept of the whole financial accounting and the management and the financial analysis, that we usually record that amount at its present value, at its present value. And I am damn sure that you have gone through this concept in your F2 paper, that is management accounting, that any amount that will be paid in future will have to be recorded today. So we are going to record it today, but this will be recorded at its present value. Remember, this 2500 is basically a liability, but that is the future value. That is the future value. I cannot record this amount. I cannot record this 2500. I cannot record this 2500, the future value today. I have to record that amount at its present value. Any amount that will be paid in future, but we will be record it today at its present value. At its present value. We'll be recording that amount at its present value. We will be recording that amount at its present value. We can't record this amount of 2500 today. We'll not be recognizing that 2500 today. So what we have to do, we have to calculate the present value for this one. We have to calculate the present value for this one. And since we will calculate the present value, this is known as what? PV, that is the present value of dismantling cost, and this will be capitalized. And whenever I use the word capitalize, which means this will be added in the value of non-current asset. This will be added in the value of non-current asset. This will be added in the value of non-current asset. Now the question is, how we are going to calculate the present value? I will teach you. But so far, is it clear to everyone? Please do let me know. Are you clear with this concept? Are you clear with this one? How to calculate the present value? I will let you know. How we are going to calculate the present value? It's my task to let you know. But since keeping it aside that how the present value be calculated, are you guys getting this concept? Are you clear with this one?
Yes, sir. It's clear on my end.
Yes, Mohammadubba, Sophia, Andrew.
It's clear,
Yes,
sir.
it's clear.
Yeah, it
Nice.
is.
Now we are at the end of the session and just giving you one formula that how we're going to calculate the present value. In order to calculate the present value, formula is being used. I know that you are familiar with this formula as you have already studied in your previous papers, previous accounting papers, or previous financial account, or sorry, F paper, that is management accounting. And what is the formula to calculate the present value? Is future value divided by 1 plus r power n. How to calculate the present value? Present value is equal to future value divided by 1 plus r power n. 1 is by default. There's nothing to do with that one. It will always be the constant figure. R is basically the rate of interest. This will always be given in the question. N is basically the number of years. Number of years. Let's continue with that example. For example, $2,500 that will incur after a period of 5 years. What we have to do, we have to calculate the present value for this one. So how are we going to calculate? Future value, that is 2,500 divided by 1, that is default, plus r, assuming the rate of interest is 10%. Assuming, although this will be given in the question, this will always be given in the question, rate of interest is 10%. Rate of interest is 10%. Can I write instead of 10% 0.1? Hello
Yes,
everyone.
sir.
Am I
Yes, sir.
right?
Yes, sir.
10% means it's 0.1. 20% means it's 0.2. Simply what we are doing, that 10 divided by 100. Am I right?
Yes, sir.
It's 20 divided by 100. 25 divided by 100. So this will make 0.25. Are you getting this one?
Yes, sir.
Yes.
Okay. Now 1 plus r and bracket close, power is n. In how many years we have to calculate the present value? That is 5 years. In
5 years.
a 5 years time, so we will have a power of 5. Can you guys please calculate the present value for this one? If you guys have a calculator, so please do calculate this for me. That is 2,500 divided by 1. Yes, what will be the answer for this one? What will be the present value of that $2,500? Today at year one, what will be the present value of that $2,500? Yes, anyone, please.
10.
1,500 and
Yes, what will be the present value? 1,500?
1,552.
Okay, 1,552. So 1,552 is basically the present value. So what we are going to do, we are going to recognize this present value of dismantling cost as 1,552. So the total amount of that asset will be, that is 3,000 plus 2,000, that is 5,000. and this will make 6,552. The point is, yes, the present value of dismantling cost will also become the part of your non-current asset. And now I am coming to the double entry. Andrew, I am coming to the double entry side. Please focus this one, okay? Now, what is the double entry for this one? Purchase price and installation and the transportation we have incurred. So the entry would be property, plant and equipment debit, and bank will be credited with the amount of 5,000. I've made a compound entry for all of these costs. But since 1552, yes, property, plant and equipment will be debited 1552. But my dear, we have not yet paid the amount. This amount will be paid after a period of 5 years. So what we are going to do? We are going to recognize the liability, and the liability and the name of the liability is provision for dismantling cost. We are not going to recognize the dismantling payable, but we are going to recognize as provision for dismantling cost. We are going to recognize it as provision for dismantling cost. Are we clear on this one?
Yes, sir.
And Andrew, are
Yes,
you
yes,
clear with
sir.
this
Yes, sir.
double entry?
Yes, sir.
Nice. Sophia, Mohammeduba,
Yes,
Yes,
it's
it's
clear.
clear.
great. And one more last thing, and then we will end this session. I just want you all to digest and absorb all of this information because this is something new for you guys. Since we have recorded the amount at its present value, accounting law says that once you have recorded an amount at its present value, since what you have done that this 2500, you have calculated the present value today, and this was 1552. Now what you will be doing, that you will be doing an activity, you will be doing an activity you will be doing an activity, and what that activity is known as, what that is unwinding, that is unwinding, that is unwinding. What is unwinding? What you have done, you have made a present, you have calculated a present value today at 1st January 2019. Now, what you have to do every year, at the end of the every accounting period, at the end of the every accounting period in 2019, then 2020, 21, 22, and 23. That is for the next 5 years. What you will be doing, you will be unwinding. You will be unwinding. And what will be the unwinding? What will and how it will be done? So, unwinding is done. Unwinding is done by calculating the interest expense. Let me give you an understanding for this one. Let me give you an understanding for this one. The future value was $2,500. Future value was $2,500. And you have recorded today at a liability of 1552. If you just calculate the difference of it, that 2500 minus 1552, so the difference is 947. The difference is 947. Do you know that what is 947? Do you know that what is 947?
How do we get in line 47?
That is, future value was 2500. Future value, it means you'll be paying that amount in future 2500, but since you have recorded a liability of 1552, you have recognized a liability for 1552, so it means the actual amount was 2500 that will be paid after a period of 5 years. Today you calculated the present value of 1552, so there is a difference of 947, and that difference is basically the interest. It is basically the interest. It is basically the interest. But that is the interest for the 5 years. That is the interest for the, it's a complete interest for the 5 years. Let me give you a very simple example for this one. For example, you went to the commercial bank and you said that I'll pay you $2,500 at the end of the 5 years. Today you give me a loan amount. What do you think? if you will be aggregating total amount you will be paying to the bank is 2500. So what do you think, that bank will lend you 2500 today? Whether the bank will lend you 2500 and it will say, okay, come on, you just pay me 2500 after a period of 5 years. What do you think, that bank will lend you today $2500?
No.
No, definitely the bank will be paying you a lower or the lesser amount. And after a period of 5 years, along with the principal, you'll be paying interest amount. For example, if I would say the bank has lended you $2000. Bank has lended you $2000. It means you borrowed $2000, and after a period of 5 years, you'll be paying 2500. So just let me know that what is the difference. The difference is around $500. And what is that $500?
The interest
Yes,
that you
this
are paying.
is that is the interest. Same example for this one, that in future you will be paying $2500, and today we calculated a present value of 1552, which means that the difference is 947. So what is that 947? It is basically the interest, my dear. It's an interest. Are you guys getting this one?
Yes, sir.
Yes, sir, yes, sir.
Yes.
But this
Yeah.
interest,
Yeah. Hello.
yes,
If I may
spot on.
ask, yeah,
Yes,
if I may ask,
yes.
in the process of you preparing the financial statements, how will you treat this interest? Can we treat it interest on loan or what?
It's not a loan, it's like a liability. I've told you earlier that this is something that you have to pay. This is something that you have to pay after a period of 5 years. Don't you think that it's an obligation, it's a liability? I know it's not a
Yeah.
loan. It's not a loan, but I have some obligation that I have to pay 2500 in future. But I cannot record that liability at $2500. This would be injustice, because this is the amount that will be paid in future. This is the amount that will be paid in future. And once I'm recording that amount today, I'll be recording that amount at its present value. Today I'll be recording that amount at its present value. Now what I have to do, that every year, remember, this 947 is the amount of interest, and this is the interest for 5 years. And I know we are using accrual accounting system. We cannot recognize all interest in 1 year. We cannot recognize all interest in 1 year, because this interest is for the 5 years. So what we have to do, we have to recognize the interest over the period of 5 years. I repeat my words, we have to recognize that interest over the period of 5 years. And what will be the procedure for this one? What will be the procedure for this one? For that one, what we'll be doing, we will be calculating the interest. For example, at the end of the year one, we'll be recording the interest. And what will be the accounting entry for this one? Interest expense will be debited. 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 And what will be credited? Interest payable. Yes, we can do that. But I suggest that do not credit the interest payable. Instead, credit the liability for which credit the liability for which you have recording this interest. Credit the liability. And what was the liability? It was basically the provision for dismantling cost. So there will be an accounting entry for this one. Interest expense debit, and provision for dismantling cost will be credit. Interest expense debit and provision for dismantling cost will be credited. Provision for dismantling cost will be credited. And how are we going to calculate the interest? Today we have a liability of 1552. We'll calculate the interest of 10%. This was the interest rate that we have assumed in our example. That we assumed a 10%. We assumed a 10%. So what we will do, we calculate the interest for the year one, and this will make 155.2. 155.2. And this will be done when? At the end of every accounting period. And this will be done for the period of next 5 years. This will be done for the period of next 5 years. I repeat, what we have done, we have calculated the present value of dismantling cost. Why? Because this is the future value, and since we are recording it today, so we have to calculate the present value. The formula to calculate the present value was future value divided by 1 plus r power n. And since we have calculated the present value, now we are recording. How are we going to record it? The entry would be property, plant, and equipment debit, and a liability will be credit. Remember, it's a liability. It's a liability, but we named it as a provision for dismantling cost. We named it as a provision for dismantling cost. And since we have recorded the liability at its present value, accounting treatment suggests that since you have recorded the amount at its present value, what you have to do subsequently, that every year, every year you have to unwind. Every year you have to unwind. Every year you have to unwind. It means what have to do? You have to unwind the interest. You have to unwind it. Unwind means that you need to recognize the interest. You need to recognize the interest expense. Every year you have to recognize the interest expense. And accounting entry for that interest expense would be interest expense debit, and provision for dismantling cost will be credited. So far, are you guys clear on this one?
Yes, clear.
Yes, Sophia, Mohammeduba.
Yeah, it's clear.
Yes, it's clear.
Okay, Fatuma. Fatuma.
With regards to the interest. So basically, if you are to prorate it for the period of 5 years, meaning on a yearly basis, it will be 155.2, right?
Yes, inshallah, in the next session, in the next class, I will explain you in detail that how the year two interest will be calculated. I'll explain you. Don't worry about this one. I'll explain you that how the year two interest will be calculated. There is a different formula. There is different strategy. We will not prorated equally throughout the 5 years. It's not the case that the year two interest will be 155.2 in the year three 155.2. It's not the case. It's not the case. We are not going to prorate it on equal basis. Rather, there is some other mechanism. We will work on this one. We will study this one in the next session. So far, whatever we have done today, are you guys clear with this one? Are you up to the mark? Are you with us?
Yeah, it's
Yes,
clear.
I am.
Yes, sir.
Okay, great. So let's keep this session till here. I don't want to make you overburdened for this. You just recall it and try to practice and try to recall the lecture whatever we have done today.